Hey everyone, welcome to Breakout Wednesday. It is the 3rd of October 2024. It's currently about 8:30 p.m. on the West Coast, 10:30 p.m. on the East Coast. First of all, remember, this is never financial advice, not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Also, it's obviously Thursday, right? School holidays, and so shit's a bit chaotic, and I've got busy yesterday. Now, just quickly, obviously, we're still in an uptrend on the S&P 500, the NASDAQ, and the All Ords, and every index really you want to look at on a global scale. And before I get into volatility, obviously, we've had like the invasion of Lebanon, and there's a bit of volatility in individual sectors. I'll get into that later a little bit, but just quickly rattling through some of the trades from last week. ART, got in that. Okay, and got out on this day for a small win, and I shouldn't have got out. Like, I munted that. It was a mistake. I should have stuck in it. Had a big move up since, and might have more leg left in it. I've been going hard lately, and I find that after some big wins and some kind of pressure, where the YUMC trade was one of the biggest trades I've had in years, and I find that after a big win, I tend to, have a patch where I might do the odd stupid thing, okay? But I didn't lose money on this, but I should have made money. I should have made more money, and I should still be in it, and that was a bad call. So I'm probably going to just chill out the next week, maybe just give myself a bit of a rest, and try and get, try and rest up, because it does take it out of you when you're really pushing hard and putting size on. So the YUMC trade, holy crap. I went big on it. I got out at about 37, as I talked about last week. It's actually right below 38. It's like 37.9 something, and then up some at 45. Okay, the rest of 45, and then it's kept going. Right. It's easy to look at that and say I should have held and never sold. Hindsight's lovely. It's equally. I mean, I've been in trades like this, I've done that, and the next day gap down. So I don't regret it. I followed my plan. I just feel that Davis wouldn't have sold that, hey, but then again, it is hard. This was such a good setup. And one of the biggest wins I've had in a long time in terms of speed and size, just because I've emptied a lot of my account into that trade. But anyway, it is, that did follow that up with a loss, right? So I traded SPR, had a loss, in, out, stop below the day at the breakout, quick loss. And this is just, I don't get annoyed at this shit. It's just like, in, out, bang, and that's trading, right? Really quick loss, and it's just the way it goes. Like 50% of my trades really go like that. I just have quick losses, It is just part of business. The whole point is that you've got to catch some of these suckers, where you really make bank, right? What else was there? I got chopped out of Hum today, okay, had my stop below the day of this huge breakout, and bang, it whipped me out. That's life. It's a big win, been in that since 48, so not quite doubled the money that I had left, but nearly, so that's cool. And then the other week, Judo Bank. Someone's asked me if I'm still doing judo, and I totally. I took a partial off, but it's just, I haven't really thought about this thing much. Hey, it's just doing its thing and cruising, and I'm just going to see how that plays out, but I'm definitely still in it. And I was talking a few weeks ago how I thought the major miners like BH and that had bottomed, and maybe around here, I think it was like around here I was talking about, but I didn't take action on that, right? Like I should have, just, but anyway, I didn't. I do own this, obviously, in the self-managed super fund. I saw a dividend land in my account today from this. I've been accumulating this thing on dips for years and years and years and years now, and the dividend that just rocks up in the bank, it was pretty tasty, right? And I didn't even know that was coming, but it came, and it's like, holy shit. And it just made me think, like, if I was 18 again, when I got into trading, I was taught always have a stop list. There's no such thing as a blue chip. A stock's only good if it's going up. I just don't agree with that anymore. I think that it was bad advice. I think it was wrong advice. I definitely think that there are such things as blue chips. I think there are such things as good companies that are worth investing in. And I do think that time in the market when you're an investor is way more important than time in the market, right? So, i.e. just you need to be invested for a long time, because that's the only way that compounding works, right? Like, go study compounding interest. Like, it's the only way that works is if you're in for a long time and you're compounding everything. And yeah, I just think I think that the advice I got 25 years ago was wrong. If I was 18 again, I would be dollar cost averaging into the big banks and the big miners. Hell, I would have my risk money. I'd be trading the shit out of every bloody awesome YUMC type setup that came along, right? And I would be going hard on them, and I would be trying to get rich by trading these suckers, okay? And I'd be aggressive and just bloody go for it, because you've got nothing to lose when you're young. You just go for it, right? But I definitely would have a section of my account that was for investing, and on dips, when these things are getting hammered, just buy more and just forget about it, right? Because it's just the dividend. Like, I know I'm crapping on, but I think it's important. And I just wish someone when I was 18 told me this stuff. I didn't. Maybe someone tried to and I wasn't listening. I wish I had listened. And I do think I got bad advice back then as well. Like, I was too of a mindset of trading, right? Whereas the investing mindset is just compound stuff, buy good companies, forget about it, bank the dividends, buy more every time it dips and there's blood on the streets, and then let the next 2 decades, 3 decades of your life accumulate. It's mind-boggling how big those dividends get after, like, you imagine if I'd owned this shit for 25 years now, that dividend today would have been 10x what it was. Anyway, I've talked too long on that. Now, AVH, I've got some setups, okay? AVH is a massive base forming, and Matt Hope posted it to the forum, and he posted it like 14 or 15 days ago, and this handle hadn't occurred here yet, okay? Like, let's just have a look. Where is it? Here, right? So Matt had posted it back here, all right? And just, it had been running up from this bottom here, okay? Straight up, and it just hadn't, like, I saw that back then, I thought, shit, it's got potential, but no, because it's run up from here, it's got this massive air pocket, it's not for me, But I whacked it in a watch list, and now what it's done is given this little handle, okay, which just changes everything for me, right? This coming from here to here I don't really have edge on that, because a lot of those trades will just, like, give you a little fake and then bang, and just lose money. But when they give you this little handle, it suddenly turns from a shit setup into a good setup, okay? And so, kind of keen on it. The only downside is that the moving average is, like, it could do with more time. Like, if that had another month below that resistance line, it would go from being a good setup to a brilliant setup. So anyway, I haven't 100% my mind up, to be honest, but it is forming to be a pretty good setup. So now another one, let me just pause. Yeah, I'm looking at Chubb on the insurance company on the NISI. It's just sitting up here at all-time highs, and then this I need this to base for longer. Okay, 100% do not have a setup a thing in yet, but I've just been testing some new scans out that we're working on, see how the Bollinger Bands squeeze in. Soon we're going to be able to find these via a scan, which is just going to be so awesome. Anyway, I'm fixing this at the moment. It's going to find all this, right, where these things that are basing, and then just basing for long enough that the Bollinger Bands are coming in and squeezing, and they're the best breakouts, right? But this, if you just count it, I just want it for it to be super high probability. I just need another 4 to 5 days in there. So that's on the watch list. I know it's a boring, expensive insurance stock, but they do move when they want. Another one on the US markets is Deck Corp. I've talked about this already, maybe a week or two ago. Ascending triangle now, 1, 2, 3, kind of 3 to 4 touches, kind of tested that resistance line. I know these are a bit below it. Rising bottoms, rising lows. This is a big company that owns some very, very good brands, and it's just setting up here and just basing sideways. And it reminds me of that Microsoft kind of little bit. This is a bit looser, but that base that I was talking about back here, right? Bang. See, it reminds me a little bit of this sucker. Like, this is tighter, probably not as clear with the ascending triangle resistance. It's just tightness, isn't it? For kind of how long is that? I don't know. Shit, it's a month maybe, but it reminds me a bit of that. But Decker's, I definitely like Decker's setup, and it does help the fact that I like the business too, and I know a bit about it. Now, what else was there? I wanted to quickly talk about Shaver Group and SSG, okay, and just how this base has been going sideways here since December 21. Wow, okay, that's actually a very long base, isn't it? And there's a bit of chat on the forum about how it's a bit of a dog of a stock and why we want to get behind this. Why do I want to trade this stock when it's been going nowhere for 3 years? And that is definitely what happens before major moves. Okay, go back and just become a student of the markets. Have a look at Tesla. Right, look at this. This went sideways from bloody 2010 until 2019. That's 9 years of sideways action. Didn't do jack shit. And then bang, right? I could show you so many. Let's just have a look at my favorite one, ResMed, or one of my favorites, because it did it too, okay? I remember this because I was in it back for a long, long time. And look at this. This went sideways from 01, let's just say 2000, and to 2012, okay? Broke out, bang, all right? It's the whole point of base trading is that things go sideways. Companies are figuring their shit out, right? They're figuring out how to survive. They're figuring out how to grow. They're figuring out what markets, what niches, how the hell do they make this company work? And during all that time, they go sideways, right? And smart people accumulating, insiders are sometimes accumulating, but the fact is the company hasn't sorted their shit out yet. They finally sort their shit out. If they don't sort their shit out, it goes down the gurgler, as Frank would say, and it goes broke. If they do sort their shit out, eventually it starts getting nice volume coming in, it starts waking up, and it starts breaking the new all-time highs, okay? That is 100% what technical analysis is about. If you go read the classic, Stan Weinstein's book, William O'Neill's book, it's all the same. Everyone talks about this. And so I look at SSG and think, okay, like that's all-time highs. This thing's been going sideways for 3 years. If that's breaking a new all-time high, then how is that bad? Okay, I don't know jack shit, and I'm not in terms of what's happening inside that company. We're not sitting on the board. We don't work for them. I can go read, and I have read their ASX statements and their website, and it just tells you. It tells you a little bit. It tells you what the company wants you to know. It doesn't tell you all the other shit. And that's why I look at charts, because the fact is, if that breaks new all-time highs, that's telling me that maybe, just maybe, this company is doing something right. And maybe if it's just headed for $10, it's got to break $1.27 before it gets to $10. So I'm just going to climb on board and I'm going to take it, right? And I'm going to let it play out. I'm going to have a stop loss. I'm going to show you pretty much. I'm going to have it down here. I'm going to have it wider because this is just run, right? Like if we go in here, it's just run off these lows. And I hate shit when it does that, right? I want the handle to form. But I'm not going to miss that signal because that is such a big base that, and if you look at some of the examples last year, like AMD and NVIDIA, like some of those ran off the lows too and I took them, okay? Yes, I want the handle, but not always. Like sometimes you just got to like close your eyes and just buy the bloody thing, right? And I'm going to take it. But it might fail, right? Maybe this is just a piece of shit stock that's going to fake me out and then dump, okay? I don't know, but time will tell. If I'm wrong and this thing is a dog, then I'm going to get stopped out down here eventually. I'm going to lose a little bit of money, right? Okay, but if I'm right and this thing is doing something good behind the scene and all these big news things come out in the future about it, then I'm going to make 10 to 1, 20 to 1. I'm going to make a blowout risk reward on this thing, right? Because that's what big bases allow you to do. Like if this is going to have a big move, big moves come from big bases and that's going to have a big move, then I'm going to sit back and capitalize on it, right? If I'm patient. So that's that. And the other one is STP, right? And so STP is what's it? Sorry, I had to pause for a second. Yeah, so look, STP, this is a huge base. Obviously, it had this big gap down. Let's just zoom in here. And I don't know what's going to happen, right? Maybe this is headed back down there, all right? So I'm not going to take my eye off it. It's like SSG, right? This thing had a gap down ages ago. Thought it was going to break out, gap down, and then, it's worked its way back around. So who cares, right? I never touched these things before the breakout, right? And I don't give a shit what it does. I think this could take another 2 years to base, and that's even better, right? So just keep my eye on that. All right, just the last one to talk about is just the home builders, is MHO and the NISI. Okay, so this needs to come around and form a little tight right hand side, right? I'm not overly desperate to trade this. I've been faked out a bit before in this stock, so I'm not, but this is forming like 3 touches that resistance up there. If that can form a nice tight down right hand side, it could be good. And just on that topic, right, I did talk heaps about Lend-Lease a few weeks back. I'd love this to give me an amazing setup. If we just go like this has so much potential to start trending up. Should I just buy that in the self-managed super fund and just kind of try and forget about it for 5 years? All right, these there's, I don't know, a lot of you may know a bit about Lend-Lease and been reading up on it, but I've read a lot. There's been a bit in the Fin Review and a bunch of other places, and these guys are like they got in some trouble and they did some bad decisions, and they've been kind of a dog stock for a long time. But they're unloading a lot of assets, selling a bunch of shit, kind of getting rid of a lot of dead wood, and maybe it's a bit of a turnaround story, all right? But I'm still kind of bullish on it, and I would love a really good setup. I mean, I do believe it's in a Davis box now. Let's just test it, but. Yeah, but it's not the greatest Davis box in the world, is it? It's pretty short term and it's not that tight and all that sort of stuff. Anyway, I'm keeping my eye on it. All right, that's it. I'm going to piss off. Talk for too long. I only meant to talk for like 10 minutes, but I started, dribbled a lot. Hey, take care, mate.